Is the world really volatile?
The dollar is being challenged as being the middleman of everything.
Some years ago, when you spoke to a client, he would have 20 minutes. Today, this attention span is reduced to 5.
People thinking that they have to make very rash emotional decisions.
If you don't do anything, not invest, then by default, your purchasing power will drop over time.
First of all, it starts with trust in a relationship and then extends to everything else.
How do I protect my wealth? Hello and welcome to Inside Private Wealth, our podcast brought to you by WELF. And in this episode, we look at navigating an uncertain world. How do I protect my wealth? And with me here today is Farah Mourad, who is the market analyst for IG. And here we have Christoph Tunkl, who is the CEO of WELF. Welcome to you both. So maybe, Farah, I start with you. Might ask you the question, is the world really volatile? Is it really challenging, or is it just noise and hype that we're hearing?
Well, it's both. But I think the issue is, or what we can highlight is the proportions on how people think it is. Because obviously the risk is real, geopolitical tension is real. The trust in dollar being questioned, especially if you've noticed, maybe we're shifting into a world where the dollar is being challenged as being the middleman of everything, and we're seeing more a move to maybe economic camps formations. Then the credit stress is real. These are uncertainties. We're not sure how we can tackle them. We're not sure of the outlook of that. But I don't think that's what the markets, investors are focusing on. What we consider uncertain at the moment and how we experience it is the cycle of news. I think the intensity and how fast we're absorbing, and we have the luxury to maybe decide that at the moment that we hear certain news, we can decide what to do. And that's, I think, what we consider as uncertainty, but it's noise actually.
Okay, that's one perspective. Chris, what's your perspective?
I think it's actually a very good analysis already on the economical part. And yes, true. I mean, the news access is way louder, way easier, much more news. The news flow for everyone is accessible. I think it's generally also more noisy because complexity in general changed. There's not only complexity on the economical scale, macroeconomic, microeconomic, but also on the individual scale. If I see it from our wealth management perspective, obviously the client's life has been more complex. And all this complexity, information flow, things to consider today make it more noisy.
But is that what they're telling you? Are they telling you my life is more complex?
I don't think they realize that it's more complex because obviously someone else is handling it usually. But you can feel that the speed is picked up. So maybe some years ago when you spoke to a client, he would have 20 minutes to discuss a question. Today, this attention span is reduced to 5. So there's more questions, shorter answers, more stress somehow in this. So I think it's the level of noise that increased. It was always there. It's just the level of noise that increased.
So what is the role of the wealth management then in that situation?
Keeping the noise level low at the end of the day. So the more questions you have, the better the more you talk to your clients, the better you can understand the stress level, the complexity, analyzing his assets and so on. The easier it is also to give him the comfort of handling this wealth and reducing this noise level to something that is more comfortable for the client, easier to understand, and so that he doesn't to screen the news on a daily basis.
I guess the fact that we're seeing far more retail investors, right, piling into equities these days doesn't exactly help matters, does it, Farah?
Not really, especially post-COVID. We've noticed a spike in retail investors, right? And with that comes a lot of noise. And technically speaking, if we want to try to compare realized volatility to potential volatility, which comes from the VIX index or the options market, to simplify it, it just gives us an idea on how the markets are expecting or pricing future fear. So compared to potential projection and realized volatility, the gap is big, which, if we want to simplify it even more, it means that the markets were panicking, but it did not been maybe priced or realized in the price action. So obviously part of it is because the major market participants in the options market for the short term is retail traders, and that's the noise coming with them.
So I think you both agree that there is volatility, listening to you both, but that volatility is obviously not held by exposure to headlines, exposure to news, people thinking that they have to make very rash emotional decisions. So in such a world, if we just take a step back, what would you say are the sort of main factors that really eat into people's private wealth?
I think you said one word is interesting, emotional. So I think the unrational decision that is often based on emotions. I mean, we all want to invest. Everyone is chasing the news. Nevertheless, even if you don't read it, you feel uncomfortable. And then your emotion kicks in and you often take decisions that are not based on the proper information. So I think in this perspective, again, it is that you need a trusted partner, a counterpart, a sparring partner that takes away a little bit the emotion. First of all, it starts with trust in a relationship and then extends to everything else.
Good point. And I think what's interesting with Christoph is that he have exposure to clients' mentality and what they're worried about and the mistakes that they do. But I mean, from my perspective, it's basically, I can sum it up to inflation. Because if you want it or not, if you don't do anything, if you just hold and like not invest because you're worried that you're not really sure about investing, then by default, your purchasing power will drop over time. Inflation will eat that purchase power. So not doing anything is definitely a mistake as well.
It's interesting because you've got two sides of the coin here. You've got almost doing too much or doing too little or nothing at all.
Yeah, especially I've noticed that post-COVID for these individuals who felt that I'm financially stable, I've done well enough, and now I can feel comfortable. Then COVID came and the inflation wave remaining till now, it made them feel like, okay, I'm not as financially stable as I thought before, even though their money is still the same. But inflation made them feel that the purchase power is dropping.
What does Farah do to guard herself against inflation personally?
The very basic classic stuff.
Right. Such as
Bonds, such as especially some yields are even real yields that we take into consideration the inflation impact. They're starting to be positive. Commodities is a very good way. And when I say commodities, obviously everyone's thinking about gold and silver. Gold's still more classic, more less volatile, even though it wasn't recently. And yeah, then it changes with time, but that's probably the broader way to protect.
Okay. So that brings us nicely. I'm already trying to dig underneath the surface a little bit here to find out what makes you tick in terms of your personal investment portfolio, Farah. But if I now put you on the spot, Farah, and I say maybe the question's a bit unfair, but we have to ask an unfair question. $50 million are sitting in your bank account, doing nothing. They don't have a home to go to. And I say to you, Farah, please find a new home to invest the homeless $50 million. What would you do to make that work for you and sweat for you, that money?
I'll tweak it a little bit because, this is a question everyone will reflect on it. And it really depends on your portfolio, depends on your risk appetite, depends how much time you still have or to focus, follow your assets, or basically you have wealth management to help you with that. But personally speaking, I think I would try to maybe invest bigger in whatever I still believe is supported. So I would look for opportunities and this maybe early cycles of things. And this early cycles look right now in soft commodities, industrial commodities, even though they went up. Or if I just want to, not focus much, I would just follow a commodity index, which will have everything in it. Or I would focus on sectors that won't be affected by the macro environment or by policies that can shift on a daily basis right now, or the headlines. And these sectors that were not so popular back then, but now they're a bit more, they will be financed regardless of the financial situation and the economic situation. I can see these opportunities in cybersecurity, in infrastructure, defense. These will probably keep on getting financed even if geopolitical tension drops from now.
Christoph, I'm asking a wealth manager to give himself wealth management advice.
That's
So
the hardest one.
I don't think I'm being unfair here.
No, Joe. I mean, Farah reasoned that perfectly fine already. I think the secret is, first of all, I would tell you not to do it in one shot. I mean, I wouldn't invest 50 million in one shot. I wouldn't split it up. This is a long-term process. And the secret might be that whatever asset allocation you go for, the traditional one, for alternatives, commodities, bond, shares, where everything has a place in it, just try to balance it out over a period of time and find the right fit for you. From my perspective, I would probably take 40 million and exactly generate this balanced portfolio that gives me exposure a little bit geographically diversified, asset classes diversified, mix in a bit of private markets as an alternative asset class, and then obviously keep a part of it, which is then more on the liquidity management side, which allows me that the money generated with that part, well, liquidity is needed, so I would spend it for whatever fun I would have in mind. So that would be my take on it.
I think Christoph is like highlighting very important points that when you invest in something you are actually interested in or have the passion to, it could be your way into understanding the markets more and the investment world more. So it's very important, first, because you'll enjoy it. Second, you will be forced to invest more of your time.
True. Yeah, very important factor, obviously, time.
I mean, one thing that we haven't touched on at all in terms of investments is obviously alternative investments that fall outside the mainstream of alternative investments, right? Such as maybe art or classic cars or fine wines or cigars. Are these sectors, Farah and Christoph, that you would advise people to look at? Or what would you say?
I mean, maybe Christoph can answer that a bit more in depth because I'm focused on more the classic assets that we, offer. Obviously, it's there's some where it interlinks, whether it's because there's an ETF link to it or there's some offering link to it. But yes, I think it's very important to invest in something that is beyond the classic asset class.
I think you're right, because now we're talking about an asset class that by definition is not a traditional asset class. So I think that we have to differentiate between, is this something I invest in that I like, that I spend my time with and I have really an interest in? Then it has actually not really a value, because then it's something you do for yourself. Is it something you consider like a car collection? You speculate on the value to increase, then yes, then it's an asset class. You should have the experts around it, you evaluate it, you buy and sell the cars basically to increase your value. So generally, this is for me asset class that I would classify in a passion investment. For me, alternative is, beside of the traditional ones we all know, is the access to private markets, which recently came up more and more. So investment opportunities that were, as of today, reserved actually for institutional, and are now opening part by part to private investors.
I mean, obviously, we've been hearing that the world, yes, it is more volatile. Maybe it's more challenging and probably more complex. But if we then pin this down to one principle which people should adopt to practically behave in the right way to safeguard their wealth and their assets, Farah, what would that be?
I mean, as you said, but you forgot one really important aspect as well. With volatility and uncertainty, opportunities can be even more beautiful, I would say. So you need maybe to try to filter your decisions with these three different points or questions. First, am I following a hype? Am I following a trend because everyone's talking about it? Or do I really understand this asset? Second question, what does this asset do? Which problems does it solve? What does it do to the economy? And so on. And then the third one, and the most important, I do believe in this asset. I think it's going up, or I have a positive outlook. But then if it drops, if I'm wrong, how wrong am I ready to be? Am I ready to keep on holding onto this asset, whether it drops 20, 30%, it goes into correction? Am I really a believer in this? So you answer these questions, then you're probably good to go.
So it sounds as though it's really about behavior, human psychology, people being aware of themselves.
Yeah, absolutely agree. Because first of all, obviously, as you mentioned, Farah, is that you need to accept yourself where your level of acceptance or losses is as well. I mean, no one wants to lose money, but you need to define, okay, until one point I can stand it, I can bear it, and when it's getting too stressful. And if you don't manage to do this yourself, and I mean, we as you said, we discovered the complexity of all this. Find the right sparring partner. Find a trustful sparring partner, which you can shoot the questions, discuss it, constantly challenging yourself. Because I think that's the only way you're going to get the right direction and answers that you're looking for.
What makes a good sparring partner, Christoph?
At the end of the day, it's trust, to be honest. I mean, it stays a human relationship. As a wealth manager, you see that unfortunately, in the last years, often these relationships move to something where we might consider the client as a good and the bank as a service provider. So the wealth management idea is to bring this back to a level where we have a trustful partner, and that's at the base is always human relationship. If we don't sympathize each other, we can never find this common ground on how to handle your wealth or discuss even about it.
It's a complicated relationship.
But it can be a nice one.
Yes, yeah. Because they need to trust the communication, trying to keep them in the loop, updating them.
I think the balance is, again, because you see every client is different and you have to treat them as well. So some clients, they like the inflow of information. They want every morning their newsletter. They want the call every morning. They want to know what is happening. And some of them don't want to do that at all. They just want to go for a nice round of golf, getting some of the news and know where the portfolio stands. So that's what I said, this human relationship, you need to understand and learn what your client wants.
In a way, it sounds like a partnership or even a marriage, if I could put it this way.
It is somehow, because obviously, I mean, if you want to understand the client, if you really fully want to understand the client, what we try to do in a wealth management and a really full spectrum, not only the financial part, you also need to know the preferences, the private elements, the family situation, everything is part of it. So marriage, I wouldn't go that far, maybe.
Sounds even more intimate.
I wouldn't go that far, but it is close. Let's call it close to marriage.
You have to work hard for it to succeed.
Yes.
Okay, well, thank you to my guests on our first podcast here, to Farah and Mourad. Thank you, Farah.
Thank you for having me.
Thank you to Christoph Tunkl,
Pleasure.
CEO of WELF. Thank you so much. And of course, thank you to the many members of the production team who helped make this podcast happen. Obviously, you will see all of their names in the credits, and we will be in touch very soon with our next episode. In the meantime, stay healthy, stay safe, and we will see each other very soon.
Thank
you.
you.
Thank you.
Thanks for having us.